Good morning, everyone. This is Brad Matheny. Today is the 16th of May, Friday. We made it to a Friday. Boy, it seems like it's been a never ending week, month, couple months of doctors over here running around. Next week and the week after should get back to more normal. Hopefully, my brother's doing well. Follow up checkup yesterday looked good. He's not dancing yet, but soon, hopefully, soon. So this is the Plan Your Trade video for Friday the 16th, and pretty solid rally. I do want to remind everyone that we're in a bullish trend as long as we stay in this upward movement in this flag. So this flagging formation right here is all bullish. As long as we stay in this upper flag, we're going to be bullish, bullish, bullish all the way up. Okay, so we are in an upward trend. There is no fighting it until we get a breakdown move, which I've highlighted here, potentially in blue. Drag these out because yesterday was another up day. Today looks like we're going to open up just slightly higher, about 0.3% higher. I do still believe that, the most logical outcome is potentially to the downside, but I will tell you that Trump's moves have been, I hate to say the word brilliant, but they've been brilliant. I mean, he has renegotiated world contracts, trade tariffs, and global trade with the U.S. pretty much in the last 30 days for the entire planet. And he is apparently getting a lot of concessions with regards to China, because I just saw a report the other day that China's shipping to the U.S. has pretty much ground to a halt. And that's got to be very concerning for the leaders in China. They do not want to have their economy grind to a halt with regards to the US, as much as everybody was saying that China would just go around about. You know what? The real reality is China relies on the US economy just like the rest of the world does. And access to the strongest, most dynamic economy on the planet is tied to their economic growth. If they do not have access to America or North America, let's say, then they're going to have some real growth issues because the rest of the world does not consume like the US does. So, if this continues to play out, so you've all heard me talk about this potential roll here. Well, if this continues to play out to the upside, what would we be looking at? Well, the cycle patterns themselves are clearly showing the June, July low. So we'll come over here. Here's the July low, draw a vertical line. And here's the October low. So we'll put that here. And that was my expectation with regards to rolling out into a rolling 2026 upward trend, or potentially rolling out later like this. If we do invalidate and move to the upside here, what we would likely see then is something similar to this: an upward move here, rolling into that July low, rolling out into the October low, and then potentially moving out into an upward trend. So that would be kind of my guess. The lows would still play out, in my opinion, and maybe retest this 590, 580, 590 area, this consolidation high. Remember, we're moving through essentially an inverted move here. You can see this breakdown. So again, from a cycle pattern standpoint, if we were to roll all the way up and invalidate, this would then be the flagging pattern, or potentially this entire move here would be the flagging pattern potentially. And then this would move up into consolidation. So we would be expecting some consolidation out here before we move to the upside. So that would be our inverted excess phase peak pattern playing out off of this low, rolling up, inverting down, creating that flag, that inverted flag formation, and rolling back to the upside. Now we still have this flagging formation playing out, so we'll see how it plays out over the next couple of days. But obviously, it's Friday. The market seemed to want to go up. It's going to put, the dollar is down at about 101. Gold is consolidating, still trying to beat its way into a bottom. But I wanted to show you the opposite side of what could happen versus my downside expectations. So still, until we get above this 613, 614 area, we still have a even if we did get slightly above it, 620, 618, we still have a chance that we could roll over into downward trending. We'll see how it plays out. This is right now still in consolidation, still rotating. Everything I've been telling you about over the last couple of weeks and months is still playing out very aggressively right now within this consolidation range. Remember, we have the consolidation low down here at about 480, and we have the consolidation high up here at about 613, 614. We're in the midst of that. And like I said, we could either continue to rally up and invalidate this trigger, or we could at any time break down. In the meantime, we are still bullish. So be aware that, price is laboring and consolidating. Now, a couple of things I do want to show you. The SPY cycle pattern today is a trending gap potential. We are in bullish trending, bullish explosive with bullish weekly bias and bearish daily bias. That hasn't changed. We do have, I showed everyone this, I believe. This is my internal bias. So this is daily. And I want you to see that we've now moved into, this is inverted. So we get a buy trigger here. That's essentially a new short trigger in the SPY. You can see that we're getting this upward trending here, just like we had this upward trending here, which is essentially basing bottoming, just like we had this upward trending here, which prompted this big breakdown back in December of 2024. And you can see it didn't really mount into much, but it was a downward trend. So when we get into this downward trending here in the secondary bias and upward trending here in the primary bias, generally that leads to a downward trend in the SPY or consolidation. So be aware that, upward trending, downward trending leads to consolidation or downward trending. Upward trending leads to downward trending in the SPY. Same thing here, kind of flatlining, basing leads to downward trending in the SPY. And now we're getting that upward trending, and here we have this downward trending here, and this downward trending here, and here we have this downward trending taking place. Again, upward trending here leads me to believe that we are looking at this potential downward move, especially if this continues to break down. So kind of an early warning trigger right now that the market, the SPY, is very, very weak in my opinion. Okay, so now, do I want to share anything else? No, I guess that's it for here. The crash index is daily, has gone back into bullish here. We're below these lows. So I kind of look at this as a bit of a sideways consolidation from this level. I would say that we'd have to get up above this level to really move back into upward trending. And as you can see, the slope of this move is very aggressive. We move back into kind of that island topping formation right here. and we'll see how this plays out. This is the same island topping formation that's going on right here. Gold is moving downward, dollars hovering around 100, which means we're at par with the general forex, different foreign currencies, and we're kind of in that, I would call it a neutral zone. 100 levels here, kind of right near this middle 61875 area, and gold moving downward slightly tells us essentially that traders are waiting for some sort of direction. But the crash index here, creating this little island move here, is rather interesting. We'll see how it plays out over the long run, but kind of interesting that we got this gapping island formation. I mean, you can go back and you can try to look at these islands. We had a little island gap here, we had a little island gap here, and you can see what happened with the SPY is that we rolled a little bit. This was in an uptrend in November. We rolled into that early topping pattern here before we broke down. We don't get a lot of these little island formations. They don't happen all that often. If we go back here, I don't see any. I see a little island formation right here, a little island gap, little island maybe gap right up here before it rolled down. And again, before this rolled down, S&P didn't really roll much. And I mean, I can go back and keep looking, but it's really kind of futile. So now the island gapping formation to the upside here, if we continue to the upside, meaning this is a gap up and break that high, that would be very, very positive. But we haven't done that yet. So we'll see how it plays out. Okay, gold and silver. I don't want to waste everybody's time. Rolling back down. Now, I'm going to show you something here that I find very interesting. And this is 30-minute, go to hourly. So remember I told you guys that we were going to get into a flag? If this is the ultimate low, we would essentially move into some sort of a flag. Well, here we go. Come down to the ultimate low, come up off the high, and we move into a big, beautiful flag. Same thing over here. We come down to the ultimate low, come back up, and move into potentially a big, beautiful flag. So, ideally, ladies and gentlemen, is, if we get this flag and we get this breakout, we're probably going to move up into this area here. Let me take a look over here. Yeah, probably somewhere right in this area. Setting up consolidation around 33 again, and just above 3,300 here in gold. And that would make very good sense to me that this is kind of what we're looking at. We have the ultimate low off the excess phase peak pattern. And that ultimate low is going to set up potentially into a flagging. And here's our flag. And depending on how we stall, if we stay away from this ultimate low level, don't breach that level to the downside, or this level to the downside, then we would likely see some sort of an upward move up into consolidation, off of this flagging pattern in gold. Now, the gold cycle pattern today is a rally and counter trend mode. Okay, we're in bearish trending mode. So a rally and counter trend mode, counter to bearish would, in my opinion, be bullish. So we'll see. That means we could get a nice solid little move to the upside here, if I'm interpreting this correctly. Maybe back up into these highs, maybe quite a bit higher. We'll see. And I would suggest that that would mean that we move from roughly here back up maybe into this 32.75, 32.85, maybe $33. But ultimately, I think we're kind of targeting this area and or this area in gold and silver. Okay, come back over here to Bitcoin, off a little bit, flagging out, looking like we're getting near this ultimate high. Remember, Bitcoin tends to kind of lead the SPY and the QQQ. So this flagging formation, sideways consolidation, back kind of in this channeling area back over here. You can see how we ran into some real resistance. Whoops. Kind of ran into some real resistance right in this area. But again, stalling up near this 104, 103 area, and potentially moving downward. Now, this would be an ultimate high. I've highlighted it right here. So it would be a visual order. It would be a unique high. We are still bullish in this flag, just like I've been highlighting. We have, in this flag, that's what I want to talk to you guys about. When we're looking at these excess phase peak patterns, and you come up to a big flag like this. Okay, this is bullish up. This is bullish as well. And the pullback is bearish. So you have very defined trending. Now, if we get the breakaway up here above this flag high, then we're really bullish. Oop. And this is a big extension of a bullish trend. If we get the breakdown into consolidation, this is very bearish. Breaking down and breaking below this low is very bearish. So be aware that the structural opportunity for the excess phase peak pattern is as I'm showing you here. Okay, structurally, throughout flagging, you should be bullish until you get this breakdown of the channel. Then that, as soon as we get this breakdown right here, starting to move downward, that's when you should start taking a more bearish approach. Now, once we get below this level, this is very strongly bearish. Okay, this is very strongly bearish when we get below that lower flag channel, because that is basically a breakdown. It is a price breakdown. And here we have the same, our opposite type of trigger to the upside when we get above this upper flag. So once we get into here, consolidation, this is choppy, neutral. And then eventually what would happen here, guys, as I'm drawing around this, is we would get some sort of a chop mode, and then eventually either a rally on up or a breakdown to the ultimate low. So you see here how each phase presents very clear trending. Okay. And where we're at right now is that we are in this broad flagging formation. You can see to the upside, bullish, 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 bullish. We have not broken down. If we do get a clear breakdown, we will move out of bullish trending into bearish trending and look for this level, this darker level here to get broken. That's this lower channel. That's the flag low. And until we do that, we are just kind of upward trending. Now, I will leave you with this, and I want you to ponder on this for a little bit. SPY is showing pretty solid weakness right now. So as we head into the weekend, hedge and or protect your positions. Remember, we have that gap setting up right here. And then I want to show you again that we have that brand new daily short trigger that's being generated right here about 2 days ago. It's the 14th, so 2 days ago. This is a brand new daily bias short trigger, meaning the SPY has gone to a brand new daily short. Could be a very interesting move in the markets in the SPY and the QQQ and all, basically if that short trigger plays out, this is like a last bit of a exhaustion rally phase here. I hate to say it, kind of a last little exhaustion rally phase right here, potentially rolling downward if that bias trend is accurate. If that bias trend is accurate and we're moving into downward trending bias, then we would be looking for a breakdown. And remember, the breakdown itself is coming across this level here, pretty much right across that lower rejection. So that's kind of the level I would think that we would be looking for a breakdown right up over here. So that would mean 578, 576, 578 as a breakdown level would be a breakdown below this flag to me. I draw the flag wider so you can see the range and the rotation, but really a breakdown below 576, 578 would probably be a pretty good indication that this lower channel 560 areas are coming back into play. So we'll see how it plays out. Very interesting, though, that, we've set up this broad excess phase peak pattern. This could be I mean, if you understand the context of this, let me try to show this to you. If you understand the context of this means either we break downward into consolidation and then maybe an ultimate low, maybe. Pick a color you guys can see. Or it means that we break upward into potential flagging before we break out of this trend into consolidation and setting up some sort of a new high. And how that works, guys, is that, we would essentially be setting up a very big inverted cycle formation here. Okay. Off of this low, we would flag out here, potentially setting up consolidation, potentially setting up the high. So this would potentially be our flag. This would potentially be our consolidation. And this would potentially be our ultimate high. So you can see how the excess phase peak patterns can operate in a way that helps guide us. You can see essentially what the pattern should look like in any event to some degree. I mean, I am guessing at the ranges and the heights and what have you, but structurally, this is kind of what I think could happen. So we're in that real middle breakdown area right now. If you get right down to it, we're bullish, we're in consolidation, we're struggling for direction. We don't know which way it's going to go yet. We wish we did. It is in a bullish flagging pattern. So for now, we can continue to stay bullish. We do have this island pattern formation. We do have that breakdown potential over here with the bias trend index. And like I said, what we're looking for is a potential move here out of this level above this 615, 614 area, or a breakdown of the flag. So we're either going to get kind of this breakdown, or we're going to get this breakout. So we shall see. At this point, we shall see if we get the breakdown or the breakout. Currently, we are still bullish. Okay, so back to work, guys. Have a great day. Go get some today. Remember, hedge your positions if you're going to carry anything over the weekend. I think that's very important. And like I said, understand that the markets, in my opinion, are really seeking direction. We're getting mixed triggers. The bias system says it's going or weakening. The markets are going higher. It's kind of like an exhaustion rally here, in my opinion. And we'll see how it plays out. Okay, guys, talk to you later.